Good morning, traders at CMC Markets. Welcome to another update from RRG Research on the 15th of September, Friday the 15th of September. My name is Trevor Neal and I am an Analysis Director at RRG Research. First, let's look at the relative rotation graph of asset classes using ETFs to do this. We see that furthest on the right is the QQQ, the Nasdaq index. It is pointing downwards. It is actually in the weakening quadrant, but it's still by far the strongest over here on the right hand side, furthest along on the JDK RS ratio. We have got the S&P here also right of the 100% here in the ratio and pretty static here in that position. We've got gold, treasury bonds, corporate bonds all round here on the left hand side, and looking quite promising is the commodity index. The commodity index has been a lagger, but this oil move is really driving up, and we will look at that on a future occasion, but there's promise of the whole sector moving across into the leading quadrant from the improving quadrant. We'll concentrate on equities today, and I'm going to look at stock indices in a moment, and we'll come down to a stock pick. This is a relative rotation graph of major indices versus the MSCI World. So this is the average, if you like, of all the indices. On the left-hand side here, we've got the European indices here, Australia also, the Hang Seng, which has continues to look awful, moving in a northeasterly direction, so with improving ratio and RS momentum too. We've got the FTSE and the ASX Australian index as well. Want to look at the FTSE, the Dow lagging behind here. Russell broad index is still yet to come across into the leading quadrant. We've got the S&P on the right hand side, fairly static, very short tail here. It's holding its position quite well. The Nifty has been fantastic, bull market here. The Nikkei too, and once again the Nasdaq. And I want to look at the tech stocks in a second. They've been the driver of it. Has turned around to face this way, but it's still far on the right hand side, and still no reason really to abandon this. Now the FTSE is looking much brighter. This is a daily chart of the FTSE, two big leaping sessions here, breaking some resistance levels. This 77,700 level has been broken. The MACD gap is widening here. Enormous area of support, but this could be a double bottom in place. So low, the same low, and this is the pullback in between. So that's from 7,200 to 7,700. We're breaking up through the pullback level between the two lows here. So this implies a move up of about 500 points. This would take us up to 8,200. This looks good. It's got the momentum of the MACD, and looking at the RSI going up. Yes, it's high, it's at 87, but it's still pointing upwards. So I think, remember where this was in the improving quadrant and its direction of trajectory. I think it's going to be a revival, Phoenix index. We've hated it for so long, but now it's changing and it's putting a big picture bottom here, and at this very moment it's breaking up. We saw too on the RRG the good position of the Nikkei, and this is breaking a pretty good looking downtrend line. High, lower high, lower high, lower high, breaking out here after a uptrend line here. So the resistance to clear is 33,500, but it looks quite likely it's just doing it right now. The MACD has got momentum with a widening gap in here, and the RSI pointing upwards here and strong. Some considerable potential here, I think, from this break. I'll just slip to a weekly chart to show the big picture of this. Here it is here, and look at that big run up we had there, and we could be starting a repeat of that. At the very least, the width of the triangle itself is from 31,000 up to 33,000. That's 200. But if you think of this as a flagpole, then the minimum price objective would be a lot higher. But 2,000 anyway, and it does seem to be giving way, and it does seem that the RRG is right. This is a great one to be in FTSE, much earlier stages. But this one was already in a bull market and paused, and now looking like it's going to leg higher again. We saw that the furthest to the right of all was the Nasdaq, and it curled round a little bit, but what is the strongest component in the Nasdaq is the what we call the FANG plus, the top 10 securities there, the drivers in it. We've got Tesla furthest to the right here, Snowflake, Nvidia easing back rather precipitously here, so a lot of people have got holdings in that, and that is heading, the direction of that is for underperformance. I think we're going to see that. Meta coming up strongly here, right direction, northeasterly. Google, Netflix turning down, Apple the same. So if you like, the thing to lighten up, which has been doing so well for you, would be Nvidia, Snowflake, or best of all Tesla, to really exploit this run in the US stock market, led by the technology stocks, led by in particular this small group of the technology stocks. Quick glance at Nvidia here. You can see losing some momentum. We've had a terrific run in here, but we've got a very droopy looking relative strength index. The MACD has actually crossed down. So for the moment, this looks like it's going to be at the very least an underperformer, but is in danger of actually topping out. And finally, let's look at Tesla. This has had a real rock and roll ride here, up from nearly 400 down to 100, all over the place, up and then down, and then currently looking like up again. So we'll home in on this area in a second, but let's get the contacts. We're a long way from the two tops here at 400. There's a lot of potential. There is some resistance up here at 308, but let's study that in a moment. So Tesla, this is a daily chart now, is looking very bullish in the shorter term as well. The MACD is positive. We've got this nice uptrend line here. We broke up through this resistance with a gap very obediently and classically, came back, filled the gap, and then has pushed up strongly. That's bullish. It's just clearing the high here from June, and looks set to go to what I think will be minus resistance at 295. There is a gap here, and it could be that we would fill the gap at 289 and then come down, but there's a lot of momentum in this market. Look at that MACD here, gap widening there, and the RSI pointing up and currently close to its high. So we've got strong upside momentum on this. Expanding out a bit, we can see now that there is some minor resistance at 203, but really it looks as though it really is looking for the big round number 300, which reversed us the last time. Then we could be hunting for the highs here, the three tops at the high, which was at 313 was the high, and that would be within reach here. But we've got a lot of power in this. It is going up strongly. The RSI, as I already said, and the MACD show a lot of momentum. It's clearing resistances, which I don't think are that strong, and it's heading it, and it is a sort of magnetic level, a round number of 300, looking good. So this stock, which has been so volatile, has been over on the left hand side on the RRGs. It's coming around now looking great, and maybe, from a relative rotation graph point of view, taking over from Nvidia, which has held the crown for so long. So that and the unexpected FTSE coming into favour again at the early stages of what could be potentially a big move up on there. Draw your attention to that. I thank you all very much indeed for listening. This has been Trevor Neal, Research Director at RRG Research. Have a great day and great weekend, and may the trend be with you. Goodbye.